And good afternoon. This is the, excuse me, Elliott Wave daily update for the NASDAQ 100 being recorded on Thursday, August the 28th at 1:55 p.m. Pacific Daylight Time. The markets, well, actually, the NASDAQ did fare very well today. And even though, initially NVIDIA did not sell off. NVIDIA ran up to 184, then sold off in the second half hour. So it was very interesting that, you know, worth how the market reacted to the earnings and the disappointment, et cetera. So in any case, we did manage to push higher and got close to the call wall in the NDX and in the NQ. And that would have been at 23,808, I believe was that level. And we got close. And then it backed off. So no harm, no foul, as they say. But I think that we'll see where that gets placed tomorrow because it also is large gamma 1 sitting up there as well. And we're going to see what, if it's still there tomorrow, excuse me, or if it will be moved. So it'll be an interesting uh, just to see where they place things tomorrow because we did manage to get above and then slide back. Well, no, we got above and stayed above large gamma 4. That would have been early. And we didn't really get down to test the volatility trigger again. So that remained pretty steady at 23,573. So over in the Qs, though, we still hung out and by the volatility trigger. And so let me see what this is. I should have, nope, it's not there. So let's do it over here. So the Qs right now going out at 576. So they kind of brought it back up. So for a lot of the day, yep, they spent around volatility trigger and then it started to move. And I thought they were going to have a fair chance if we could have gotten above that call wall here in the NQ, that we had a chance to get into the call wall in the Qs. And that may happen tomorrow. It is the August monthly expiration. So it's the end of the month. So it's the end of the month expiration for August. A lot were coming off. It's the Friday before a long weekend. Volatility is really shrinking quite a bit. It's just down. And if you're really taking a look like at the SPX options, it was under 10. It was under 9 today. So I mean, like, wow, that's kind of scraping the bottom. But I imagine that that's going to go through the weekend as well. And it may just kind of go all the way up until we're closer to that Fed meeting on September the 17th. But I would not fall in love with these low vol. And I think we'll see a lot more. They might be rolling out like positions tomorrow in terms of, the risk on positions. Either they're all going to come off tomorrow, which we'll see a volatility pop, or they're rolling them out to the next expiration cycle or even out into September. I mean, September monthly. So um, back to the count. I did actually make a mistake in the labeling, and that was my belief. Feeling is that this minute fifth wave going up is going to be a diagonal, which means that wave one will be 3, wave two is 3, wave 3 is 3. They'll all be ABCs. And I had initially labeled this 1, 2, 3, 4, and 5. And so I thought, no. And that was one of my long-term members in for the channel said, Michael, if it is a diagonal, then wave 3 also has to be an ABC. And I went, oh, you're right. Great catch. And so I came in and I actually had it both in the S&P and here. So I went and I've corrected that. So now it's A, B, and we're in the C wave up, but it will be five. And so I think what we got so far is one and two, and we're inside the third, and it did build on it. And I was like, oh, what are they going to do here? So I was thinking for a moment that I could push the one up to here, and this would have been the two. But I thought this could actually, I think, could have just continued to come down in terms of being in a wave two. But it would have been a little bit dangerous because it could not have gone beyond the 23,381, actually 371. Um, but it didn't. It stopped and then it rallied, and it rallied strongly right up and out of that. And so I think if anything, we're just going to have to go inside, like and come down to that 15-minute chart, and you go inside this thing and you can kind of see some of what the possibilities are, like one, two, and then I kind of figured that what we have is wave one here, two here, and then the breakdown in here is that I'm kind of thinking it's like one, two, three, four, five, three, four, doesn't overlap. And now we're kind of in that fifth, which I'm hoping is going to continue to extend. Now that's kind of the 15-minute. So, but this right there in the middle kind of just really tosses it all off. So many times, again, just to show you, what I tend to do is go down to the line chart, which is on a closed basis, takes all those extremes out and just gives you where the mark where it closed on that particular time. So on one hand, I got the one and the two, even though it went all the way down to there. And then I got one, two, three, four, five. So it could be one here, two there. And then one, two, three, four, five, three, four, and we get a five. And I still, if we're just going back, I'm going to put it back on that bar. The important thing to get here is that as far as the third, that, and I go back out to the hourly chart, as far as the minuet wave three goes, I still think that we should get as best as we can, get above the wave one and wave three, even though it's going to be an ABC. And the C wave, we can get a nice third going and get up into here. And then that would just be this third, put in a four, and then do a five, and maybe get up towards here. Now, is that going to happen tomorrow? I don't know. I would say no, because it would be quite the rally. It'd be a 700-point rally. And yeah, it would be interesting if they did it. That would have to be the PC. Everything came out spectacular to send this thing to the moon tomorrow. What I mean by that is PCE, all of the other economic data that's coming out, that it all just is very pleasing and all falls into line to say, oh, it's without a doubt the Fed is going to cut. And maybe it'll even give us a 50 basis point cut. That much I doubt very much. But we'll see, because I don't really suspect that those numbers are going to really be that glowing, because all the tariffs are really in place, and now we're beginning to see and feel the effects via the economic data. But in any case, I would like to see it above 24. I'd like to see it above that high, which is 24,033. So not so much out of the realm of reality. If I can get over here, I can add one more level there. And let me just kind of go down here and just put 2.0 and see where that comes in. Yeah, just above. And that gives us that newer high. So I think that could possibly be, put in a nice 200 or 300-point rally and then do what you want to do. But I think that could help as well. So 1.618, 1.882, and then 200%, all fib levels. And then we get a four, and then we go back up in a five, and then this one I'm hoping comes in closer to there, and then we'll have to wait until next Tuesday. But again, we'll see what happens tomorrow. Now, in terms of just our levels from today, like I said, in the Qs, we remained above the volatility trigger. It looked like we were going to start to play into that, and we kind of did on that sell-off right there. Let me go back down to 15 minute. This guy right inside there. So we had that great start, and then boom, brought it all the way back down. And so the Qs kind of were playing up above 573, back below 573, and then got above it and stayed above it. The Qs go out the day at just probably 577 because we're kind of right in the middle there, and which is actually pretty healthy considering that the call wall is up at 580 along with large gamma number one. And I think that if we get a continuation in this rally, which I am expecting, then there's a fair chance that can break, and that may give us that extra little push if we get above that call wall and the NASDAQ and the NQ gets above its call wall, we get that little final push. And hopefully then what's also going to be in the works is over in the S&P uh, in the SPX and the ES, they got above the call wall today and closed above it. Not by a great number, but closed above it. Whereas the spiders call wall is at 650, and I know we got above 649, so we were kind of heading for it. So again, if the spiders can get above the call wall, and we gives a boost to the ES and the SPX. And that again will likely play into some of those stocks are also in the NASDAQ. So if the Qs can get above their call wall, then I think we can build a very strong rally for the expiration. And so, but that's just my thoughts. Reality could be something totally different. But and because we also I want to see what the markets will do just in total, where they're going to come out, what the numbers are going to look like tomorrow. Now, a little bit better volume today, at least in the S&P. We got over a million. So normally it's about 1.5 million, but there we are in the NASDAQ, still a little bit on the low side. But you can see big range, big decent range, but just about 480,000, and normally we're 600,000 to 700,000 per day. So again, volumes are not really breaking the bank here, so to speak. So I'm going to continue, go back out to my hourly chart. I'm going to continue to look for continued upside. And again, what could be the stick in the spokes of this upside wheel would be any of the data that's coming out tomorrow. If it really just spells doom uh, and puts a big question mark on lowering the rate, then yeah, market could react negatively and toss because there's a lot of risk on trades sitting out there, either waiting to be to expire or would come into play on a move. So let's see what kind of happens and be prepared for both. Because if we go downside from here without going up, so I'm kind of hoping that this happens overnight, right? And then we get the numbers. So if we can get up here and finish this third and then come down in a fourth, and that could work. But in terms from here, I'm not sure what it would be on a labeling basis. But I know I probably could get A, B, C, X, A, B, A, B, and a C, something like that. And that's all just going to be for a strange A wave up here. So, because actually from here it could be A, B, C, X, A, B, C, and we come back down, and the A wave goes there, and we come back down to put in the B wave. So that might be acceptable to a double ABC. Again, we're talking about a diagonal, and they all should be ABCs. I don't know about all the combinations thereof. But let me say it's like, because I'm not really looking for any stronger downside, there is the potential that it could happen. then I think we just have to go with where we have our levels to the downside. And if they start to get broken, that's what's going to force the market into action in either direction. And excuse me, and going down, it would be, let me go back over and just take a quick look. Right now, in the Qs, again, if we started to come down, it would have to break 645 and then again 644. Breaking 644, those are the spiders, I'm sorry. 644 would be coming back down below the volatility trigger. So again, having gone above it today and closing nicely above it, we're going to have to see where this all gets placed again tomorrow. If there's enough to leave it right where it is. And then, the large gamma level that we had broken at 645. So that's in the spiders. In the Qs, again, it's going to be that volatility trigger at 573, because we really don't have anything between the call wall at 580 and volatility trigger at 573. And so if it comes back down quickly and breaks that, then I think we can start cutting into everything that's sitting down below it. And again, not knowing where things are going to get adjusted to. So again, once we get those levels in the morning, then they'll be updated. But in the meantime, I am continuing to look for an upside move, and at least until we get those numbers tomorrow morning. And we don't know, and they may all come out all pleasing to the market. All right, that will be it for right now, and the next update will be tomorrow morning.